if you're a gold trader, you have to watch this video, as I'm going to tell you exactly what you need to be looking for if you want to enter a trade based on smart money concepts trading a strategy. So let's get into it right now. Hey, what's up with you guys? This is Irfan here with the SmartEAincubator.com and welcome to another video. In today's video, we're gonna go over some charts together, which is gold on a 4-hour time frame. I'm gonna do a little bit of analysis for you and break it down exactly what's going on. Like, you know, because gold has been crazy in the last couple of weeks, I would say. Since December 2021, and it's been choppy. If you go to daily time frame, you see that we don't have a clear trend. It's just a very choppy and fluctuating market that we are experiencing right now. And I want to tell you my opinion that what's going to happen in the future. It's not a financial advice or anything like that, but the purpose of this video is to show you how to identify high probability order blocks based on the smart money concepts trading a strategy, which is a really effective way to trade Forex. I've been doing it for a few months, like 6 months right now, and I'm seeing results like significantly. I used to be a swing trader for 2 years, switched it to scalping. Okay, so guys, this is not only for gold, but I'm gonna break it down and analyze it on gold. That the first thing you need to do when you open up a chart is identifying the lowest points and the highest points. And why are we doing that, guys? Because of the liquidity, because of the stop losses that buyers and sellers put around those areas. So stop losses, like liquidity, means money, and money is a stop loss, right? And banks and institutions are constantly looking for stopping out every buyer and seller in order to grab the money and then change the direction of the market according to their desire, right? Or, well, I mean, whenever and wherever they want to take it to. So for example, in a 4-hour time frame, guys, I can notice a very low point here. So this low point has so many stop losses underneath, which is a liquidity, right? So that's what I'm saying. I'm gonna put this dollar sign here as a liquidity, and we have this one right here, we have this one right here, and they're not grabbed, guys. If they're grabbed like this one, see, this is a high point, but it's not a liquidity anymore because it's already grabbed the liquidity. See, we have a break of a structure, see here. So this candle already grabbed all the liquidity that used to be here, so it doesn't count as a liquidity anymore. Just the lowest points and the highest points that are not touched yet. It's very important. So we have this one, this one, this one. We have a huge gap right here, and all these areas have so much liquidity. So that's what I'm saying. I mean, I hope that you got what I mean. If you didn't understand what I'm saying, drop your comment below this video. I personally get back to you and explain it even more for you. Okay, so this is the liquidity, and the next thing is identifying high probability order blocks and the trend of the markets. So if you look at gold, guys, you see that it's been crazy. It's been fluctuating. The trend is not really obvious, and it's just up and down, up and down, up and down. But if you pay close attention to a 4-hour time frame, you'll notice that we have this trend right here. So I'm not trading based on trends. I just want to show you how the trend looks. See, we have one touch here, and then the market has been bullish for a few days. We had a major break of a structure here, and now the market is consolidating. This consolidation means a breakout, but towards upside or downside, we still don't know. But we have this break of a structure. The market is consolidating. We have this break of a structure, and now it's probably doing a little bit of pullback. And then if it gives us a good momentum, then we enter our trades. But how do we do that, guys? Like, based on what? Do you trade support and resistance levels? Do you trade supply and demand? I personally trade supply and demand levels only, because they have the highest probability of smashing my TP, and I'm way more confident with that, because if you're trading support and resistance, you are part of the liquidity, and banks and institutions know that, and that's why you easily get stopped out. And that's the reason over 97% of traders fail, just because of this simple reason. So in this case, we have a really strong support level here, guys. See, one touch, two touches, three touches here, and then after this break of structure, this resistance level become our support level, right? So we had this breakout, correction, momentum, continuation. So if you wanted to take a one-to-one trade, you could easily take it right here, from here to here, 1 to 174. It was a really good risk-reward ratio trade. It's no doubt, but it's a regular break and retest trade. So it's a support and resistance. So there's always a chance that the price come back to the zone, whether it's a support or resistance, and then it gives you a momentum, and then the candle after that just stop you out one more time. They usually do 2 to 3 times for a regular support and resistance levels, but in this case the the chart was clean and it just did a little breakout, correction, and continuation. Okay, so how do you find high probability order blocks, guys? It's all about gaps. I don't want to take like super long on this video, because I have a separate video for order blocks, guys. If you still haven't watched it, I highly recommend you to do that. It's my first video on my channel. Go check out all my videos, as many as you can, because all of them are about the smart money concepts, and I have so many live trading sessions that are all in profit. Most of them, like the majority of them, are in profits using this method. So I highly recommend you to do that. Scalping is easier. You just get in and get out of the market ASAP in 20-30 minutes. You don't hold your trade overnight or anything like that, and then it's more beneficial in my opinion. Okay, so whenever you want to look for an order block, you should be looking for gaps. So for example, if I want to be looking for an order block in this bearish, in this crazy bearish movement, after this break of a structure and this bearish move right here, I need to be looking at an order block, right? So order block means that, for example, for this red candle here, I gotta be looking at the last green candle for a bearish market and the last red candle for a bullish market. So, and we have a clear example here. So we have a bearish trend here. We have so many bearish engulfing candles, big ones, and the last one that you can find, the last green candle, is this one right here. So you grab your tool, and then you draw your line here, and then you notice that the candle after that literally opened inside the order block, which makes the order block a low probability order block. Why? Because there's no gap in between. There's no gap between the candle that opened after the green candle and then the candle after that, which can make a huge gap. So I'm going to show you an example for a high probability order block. So we're in a 4-hour time frame. I'm going to switch it to 1 hour to just find it easier, and then I show you exactly how it looks. Okay, so for example, right here, I did a replay because I found a really good one. See, we have a break of a structure here, right? So that it means the market is going towards downside because of this break of a structure here. So the last green candle that you can see that has a gap is this one right here. Because if I cover the entire candle, you see that this candle opened right here, but the candle after that opened exactly like it tapped into the zone, and then the price rejected towards downside. So it makes it a low probability high order block, but it's valid. It's not invalid. And if I go forward, you see that we could take a one-to-one trade from here to here. See, it's very important. It's not broken. Now it's broken, it's invalid, and it's not working anymore. It's a low probability order block. They also work. I have a video for that you shouldn't always be looking at high probability order blocks. Even low probability ones work, but as the name shows you, there's a difference between these two. But if I want to show you a high probability one, is this one right here. No, this one is not actually. Let me show you a high probability one that is not tapped into yet. This one is a high probability one. Why? Because of this huge gap between this candle that opened after the last green candle and then this one right here. From here to here, there's a huge gap, and huge gaps make high probability order blocks. And high probability order blocks means that you just need to wait for the price to come back to this zone, and then whenever it gives you a sell momentum, then you take your sell position. As simple as that. I have tons of videos, guys. Go check them out. Go check out my live trading sessions, and then you will understand how it means. And that's pretty much it. I can show you one more, and then we can actually finish this, end this video. Okay, here, this is a high probability order block. Why? Because of this, the market is, you know, uptrend, because of this break of a structure here, break of a structure here. Okay, so you got to be looking at the last red candle before the huge spike. So we had this red candle here, and then the candle after that literally opened and broke above this order block, and then this candle opened above this, so it didn't get back to this zone to tap into this zone. So that's why we have a gap here. Even if it's a little bit of gap, it is still does count as a high probability order block, because it's still a gap, right? And this gap makes this order block a high probability order block just because of this. And then you gotta wait for the price to come back to this level, and then you wait for the momentum, and then you take your trade. In this case, if I want to extend it, you see that we have a beautiful trade. The price finally came to this zone, and then after that we have a bullish engulfing candle, two momentums at the same time. You can take your buy position here, put your stop loss here, your TP here, boom, you're done. It's a very beautiful setup, guys, and this is how you can trade high probability order blocks, not only in gold, in any currency pairs. It's amazing, guys. I just literally showed you an example, and then you can go back test it yourself. You will be shocked at how easy and effective this strategy is. And if you have any question, drop your comment here. I personally get back to you, and then I show you exactly how I do it. But this is what I do. It's not a rocket science. Just follow me, subscribe to my channel, turn on the notification bell, so whenever I go live, then you can see my live trading sessions. And by the way, if you decided to, you know, trade completely hands-free and gain consistent profits each and every month, we released the newest version of Gold EA Incubator. We also have live results available. Go check out my FX book. I'm gonna leave a link below this video. You can check out like the status for a $10,000 account. We just released a new update, and it gives you 8% to 25% profit each and every month. I also have an installation guide video for that I'm gonna put a card above this video. Go check that out. It's a very effective tool. If you don't want to trade yourself anymore, that's a perfect tool for you to give you consistent profits. So thank you so much for watching this video, and see you later.